J.P. Morgan warns U.S. commercial real estate may be the next bomb. When the Fed slams the brakes, some passengers are thrown out of the windshield. For example, the burst of Cathie Wood's investment bubble, or the collapse of Silicon Valley Bank. And according to J.P. Morgan, U.S. commercial real estate would potentially be the next bomb that could explode. Speaking at the $2.5 trillion Asset Managers European Media Summit on Tuesday, George Gatch, CEO of J.P. Morgan Asset Management, warned that commercial real estate forms one of the critical areas of risk in global markets after the aggressive monetary tightening by the U.S. central bank. We saw the stress of rising interest rates in a huge repricing in fixed income. In UK pension funds' liability-driven investment strategies, he said, commercial real estate is an area of concern. We have higher interest rates for property developers. How does that impact the real estate market and lenders in that space? Commercial property values have started to slide in recent months, as rising borrowing costs have hit investors' ability to transact. Investors are keeping a close eye on real estate funds. Earlier this month, BlackRock, a world-renowned top-tier investment firm with a strong family history, went as far as to fall into a $560 million CMBS default. Meanwhile, BlackRock's $71 billion United States real estate investment trust BREIT, a barometer of the commercial real estate market, has continued to trigger monthly client withdrawal caps since November last year, both highlighting the awkwardness of commercial real estate in the face of rapid interest rate hikes in Europe and the U.S. In a note on Tuesday, Goldman Sachs also said the commercial real estate sector was dealing with a challenging environment. The recent stress in the banking sector has fueled growing concern about spillover effects on the commercial real estate industry. With over half of the $5.6 trillion of outstanding commercial loans sitting on bank balance sheets, bank lending remains the primary source of funding for the sector. This is particularly the case for small banks, which capture the lion's share of lending. Also on Tuesday, Bank of America said investors in its monthly fund manager survey were more bearish on real estate than they have been since October 2020, having taken cautious positions on the asset class since September. Concerns over commercial and office real estate are driving growing anxiety over the sector. View more market insight on this. Is this economic downturn's worst-kept secret? Commercial real estate, particularly anything older or in need of refurbishment, has been a dog of an investment since 2020. Thoughts and prayers. Commercial real estate investors are going to learn about capitalism, unless they are rich enough to bribe for a bailout. Slight correction: BREIT is Blackstone, not BlackRock. Millennials dream for the housing market to crash. We've been banging this drum last year and a half. Just turn them into residential. That way real homes can be Airbnbs and rentals. Although my mortgage interest rate is awesome, my property taxes are through the roof and I'm on my third bank in 2 years. They keep selling it. This is why companies are desperately trying to get people back into the office. You can't just take a 20% permanent haircut in workers' commute without breaking something. The report makes a lot of sense. Depends how much of it is leveraged with loans. Don't worry, J.P. Morgan is a fortress. LMAYODRS book. All the morons looking at the charts like, look, new highs. What happens after the new highs, idiots? These people pretend to look at charts and do technical analysis, but they refuse to engage with anything that doesn't specifically support their incompetent outlooks on the market. X200B. CMBS and ALBs are going to crash, and because of contagion. will inevitably bring down MBS, all while the swap market implodes. Bullish. With less office space needed, they could look into converting some of that into housing. Probably hard to make them single-family homes, but those hostel or co-living type spaces should be easier. There's more commercial properties for sale lease around my area than I can ever remember. Some have sold to investors in the last year or two, but none are being filled with tenants. So does this mean WFH will be coming to an end? Or will it be becoming more ubiquitous for desk jobs? Will companies that utilize office space choose to force their employees to come back to the office so they can get their money's worth? Or will they simply get rid of the office space and resort to WFH for everyone? Or will they just lay off office jobs and automate with GPT-lol? Commercial has been talked about non-stop. If investors haven't managed this risk, they deserve whatever comes. You mean all the houses bought by commercial entities who cannot sell or rent them now? JP Morgan's report still has some credibility. Good. The next bomb is Epstein's JPM banking records. Remote work is here to stay. Managers are giving up offices in exchange for hotel desks so they can work remote most of the time. And as leases end, companies are moving to smaller offices located near multiple transit options. At least in NYC. I don't think JP Morgan will make it through the weekend. If a mall closes in Cleveland, Ohio and reports a CMBS default, that looks bad on paper but is an opportunity in real life. This is very misleading and lacks the required nuance. Duh. Wells Fargo announced they were closing up their real estate lending. Will be likely. You think? Lol. The best thing localities can do is make sure some commercial properties get turned into residential if able. Seems like it could be more of an rebalance and correction versus a straight collapse if handled properly. Oh no. DRVBear real estate ETF is flying. BioXMU, they rent office space to JPM. I noticed that Realty Income is down under $60 today. SEC sues Coinbase Crypto gets to be the next bomb. Maybe next to next? You can't trust anything these fucks say. Fuck JP Morgan. Fuck, I hope so. Well, there sure are a shitload of logistic centers everywhere now. Thinking face. This was already foretold at least a couple of years ago. That's why they were trying to short the ever-loving hell out of big box chains.